Hello, hi, and welcome to another market update from 23rd to 27th of September 2024. So let's start with the usual world economy. We'll be starting with our immediate two neighbors, Pakistan and China. For Pakistan, IMF has approved a $7 billion new bailout package, authorizing of which it authorized the immediate release of first tranche of less than $1.1 billion. Pakistan is going to pay a 5% interest on this IMF loan. China was the main news for the last week as it released a rescue package for its economy. If we remember, in the month of May, China has also released a property rescue package, which has actually failed turn around the year-long real estate slum that has wiped out approximately $18 trillion wealth from the households. So let's look into what all the measures have been rolled out. So People's Bank of China on Monday lowered the 14-day reverse repurchase rate to 1.8.5 from 1.95%, which was previously. It also announced a 50 basis point, that is 50 BPS in reserve requirement ratio, that is RRR, which is the reserve requirement by the banks to be kept with the with the national bank. So central bank with this also injected approximately 74.5 billion yuan or close to $10.6 billion of liquidity into the banking system. The People Banks of China also cut the rate in the medium-term lending facility from to 2.3, which was earlier 2% from 2.3. China is also considering injecting up to 1 trillion yuan of capital into its biggest state banks to increase its capacity to support the struggling economy, primarily by issuing a new special sovereign bonds. China's central bank late on Friday said that it had lowered the borrowing cost on all the standing lending facility (SLF) by 20 basis points across all the tenors. This all measures have been done by China to achieve its growth target of 5% for the year. Now let's see how the US 10-year Treasury bond has been doing in the 1 week. After the rate cuts were announced, there was some up movement we could see in the last week where the Treasury bond yield touched close to 3.8%, moved above actually 3.8%, and towards the end of the week it settled at 3.7, which was the rate last week also. If we look at the markets world over, after the reaction to the Fed rate cut and the news from the China on the to boost their economy, there was a lot of excitement in the market, and all the markets and all the segments, be it the US market, be it the European market, be it the Asian markets, were in positive for the week. We could see US market was up by the S&P 500 was up by 0.6%. The European market we could see was up by 3%, close to 3%. If we look at the Asian markets, the gift Nifty was up by 3.7%. The Hong Kong market was up by 18%. The Chinese Shanghai market was up by 10%, which has been underperforming the Asian peers for last one and a half years. It has also performed. It was up by 10% for the last week. The oil prices was trading at $72.45 a barrel. It has come down from the last week's price by 3%. The major reason was the Saudi Arabia, which has committed not to increase the production, has released a note that they doesn't want the dollar to go to $100 a barrel, and would be increasing in production, which caused this oil prices to come down for the week. The gold prices was up by 1.24% and was at 74,930 per 10 gram. In all the news, the FIIs were again had a very volatile week. I would actually say they were towards net selling, even though the conditions were very conducive for the Indian market. But I think the China factor played in, and a lot of money was diverted to China. So FIIs, because of the cheap equity that is available right now in the China, whereas the Indian equity is at a very high price right now. So FIIs were net seller in this week, and they sold close to 3,932 crore worth of equity. DIIs were net buyers, where they bought close to 15,961 crore worth of equity. So the net impact was because of the last large flow from the DIIs. The Nifty and Sensex, all the indices reached their made up lifetime high and closed at the Sensex closed at 1.99% up, whereas Nifty 50 closed at 1.71% up. Nifty Bank was 3.57% up. Nifty Mid Cap seemed to be in a consolidated zone, up by 0.3%. Nifty Small Cap was down by 0.89% for the week. So looking at the PE valuation, Nifty 50 trailing PE has reached 24.3, reaching a 2 years high, and is below 5 years average. Nifty's mid cap 150 trailing PE is now at 45.1, which is nearly 2 years and 5 years high. Still in the danger zone. Nifty small cap 100 trailing PE is at 30, which is close to 2 years high and just above 5 years high. So if we look at the Buffett indicator, which shows the total market capital to GDP, we are looking at a ratio of 113.74, which shows that the market is modestly overvalued. In the overall scenario, if you look at the Indian markets are not at a very cheap price, available at a very cheap price. They are somewhere expensive as of now. If you look at the Indian bond markets, the 10-year bond yields, 10-year government bond is trading at a 6.87% of yield. The yield curve in the short, long, and medium term is still flat. So that was all from my side. Hope you enjoyed the video. Do share, subscribe, like to our videos to get